Welcome to TheoTrade. This is Don Goffman. Here we are. It is April 27th, 2016. Well, we had a lot of news last night from Apple's earnings, which were less than stellar. Of course, I think we're all well aware Apple down just about 6.25% today, but that is old news. Really, some of the action inside of today's trade, it wasn't even so much about the FOMC meeting and the announcement over there, which amounted to absolutely nothing. The S&P futures closed on the day up a whopping 250. No, not 250, not 2050. 250. So the S&P futures do a whole lot of nothing over there. It's all about the NASDAQ right now, and I'm going to get really specific. I think, again, everybody was kind of aware of what Apple did. It's yesterday's news over here. It's Google that's really been in a bit of a downward spiral. And again, the NASDAQ that has become really the object kind of my affection over here. And again, very specific to Google. Look for Google, and the symbol that I happen to be looking at is Google L. I just want to be very, very, again, specific with that. Look at Google not only on an intraday basis, which even threatened the 710 level. In the coming days, we want to look very, very carefully at the 700 level, as that could be a signal for a much wider sell side kind of event, not only in the NASDAQ, but to the S&P futures. Nevertheless, again, we're getting no action right now outside of the S&P futures. The only place to look to is bonds. Now, here we go. I'm going to get into a little bit of a trade setup right now and follow along over here with me. Play the TheoTrade at home game. Has a lot to do with the bond market. So the bond market recently sells off, rallies, sells off, and has a pretty explosive move today to the upside following, again, the FOMC that came out. Nevertheless, though, the bonds were already in motion prior to the FOMC announcement. So just to show you kind of a clear and concise, this is throughout the evening. This is the beginning of the trading day. And of course, here we go into the FOMC announcement when we spiked a bit higher. But bonds were already on the move to the upside. So whenever you think of bonds, if you don't want to take a trade specifically in bonds, sure, you can use the TLT. So then I jumped over to the TLT and I'm like, all right, let me look for a little bit of a trade setup here in the TLT. Well, a couple of different ways you could trade this. I think you could trade to see, well, the TLT had bounced hard here. Okay, could be on the move to the upside, but not the TLT, not the bonds that I want to trade at all. I'm going to go after the XLF. So I've decided to go after the XLF, the financials, which are the beneficiary, okay, of some of the trade that goes on in the bonds. Now, bear with me for a second. As bonds trade higher, it takes down their yield, which is the interest rate associated with the bond or the note. Okay? If you think of the interest rates going lower, that is negative for the financials. Here we have bonds starting to spike higher, and yet the XLF is not impacted at all. The XLF has been tearing to the upside, okay, from 20 all the way almost here, just shy of 24. So what I would rather do than trade the XLF, and to be, again, really concise with this, I already have a very substantial position myself inside of the XLF. And it's one thing I believe, like, listen, if I'm going to get you guys into a trade, I'm going to be in the trade. So here is the XLF down about 20%. Again, I want to kind of mark up the screen over here real quickly, but this is the XLF down about 20%. Here it is now only down about 5%. It's still on a 15% decline basis over there. But what that made me do is like, you know what? Maybe I don't want to necessarily put everybody into a trade in the XLF. Let me look at some individual, underlyings here. So I started flipping through some individual underlyings. What did I get out of JP Morgan? JP Morgan moved even less than the XLF, like from the low to the high. I'm looking for something that had the most explosive upside over here. So I went over to JP Morgan, and you can even tighten up your time frame on the chart to make it even easier. Go to a 3-month, and again, change to percentage view. I don't know, not enough people do this when they're searching for a trade. You know you want to get short something in financials. You look at the XLF and you're like, oh, that's really nice. But then you go over to something like JP Morgan and you look kind of from low to high over here and you're like, well, whatever. That even moved, a decent amount. But on a percentage basis, it's basically doing the same thing as the XLF. At that point, you might as well just trade the XLF. Then I cruised over to Bank of America. B of A, it couldn't have happened to a better company. Here it is, down about 16% from its absolute low. If you want to go off here, again, this is down about 10%. Now, now up like 12%. So, okay, we found something that has had a pretty phenomenal percentage move. Now, just to take this off show prices percentage, you realize that Bank of America went from like basically $11 to $15. Again, on a percentage basis, that's pretty phenomenal. And I looked around at a few other ones. I looked at like Citi over here. What did I see in Citi? Okay. All right. Well, this underlying's moved from 34 to basically 47. Again, on a percentage basis, these are pretty staggering. But what I'm getting at is no matter what underlying I look through, all right, and I went down to Goldman Sachs and I checked out Goldman Sachs, Sir Lloyd Blankfeld, and Goldman Sachs had a nice move from 140 to 166, but it's still, that ain't no B of A. So I struggled a little bit with wanting to find a position inside of Bank of America. And again, I wanted to take you through my thought process of why I might select Bank of America over some other financial product over there. It's simply like on a percentage basis. I mean, if you look at this move in just the last, few days over here, and we can go to even to like a 1-month chart. Again, to put a little bit more perspective on it, let's go to like a 1-month daily, and let's flip this once again to percentage. Show prices percentage. What have we won just in the last month? All right, here is Bank of America still down about like 6%. Okay, here it is right now up 10%. I mean, these are phenomenal percentage moves in a short amount of time. And what I tend to look for in my trades is something that I would call statistically significant in terms of the financials and liquidity. Bank of America's got the liquidity. Bank of America's also got that statistical significance. Yes, it has come off huge over here, but look at the rebound. Is that sustainable? I mean, here's a $2 move. And again, this is a $2 move in a product in how many days? Let's start right here when it was at 13. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 trading days. If you look at like 16 trading days, this thing's supposed to move like 70 cents. You got to go out like what? 114 trading days to see expected moves of what? Of $2. So right now, if you do look out just, about like 16 trading days, because that's fair, like, the 16 days over here is semi-equivalent to some of the move we've seen in here. Again, trading days, calendar days, but we're like 3 times the expected move already. Now, granted, yes, there's an earnings announcement in here, and yes, the earnings kind of spiked off of it, but today, all right, we had an infamous doji candle. By the way, I'm not into the dojis at all, but I do find it quite amusing to say that. Anyway, this is it is kind of a bearish candle, but that's neither here nor there. There was a big reversal on an intraday basis inside of Bank of America. Okay, had a lot to do with the FOMC, meeting and so forth. Long story short, looking for a spread in here. Okay, I'm going to make this easy. I'm going to make it as simple as can be. I'm looking for an in-out spread. Now, when it's a $15 product, you can't exactly build like a $2 wide spread. There's just not that much meat on the bone, right? I could buy these 16 puts and sell the 14 puts, but come on, the 14 puts are trading for like 13, 14 cents. In this kind of case, just go after, go after something like a $1 wide spread. You don't have to get that cute. You can buy like the 15.50s, maybe sell the 14.50s. Listen, it's a $1 wide spread for a 47-cent debit. You do one contract, you can only lose $47. You're going to probably have to do a couple of contracts of this to make it worth your while. And again, you do want to use the spread, right? Why do you want to use the spread? The 15.50 puts, they're in the money right now. By how much? Okay, by basically 48 cents, and yet you can buy this spread for about 47 cents. So the trade is pretty much trading for its intrinsic value. Its spread is what we term at parity. So this is absolutely a bearish trade inside of Bank of America, given the fact that the financials have had phenomenal upside, specifically Bank of America, again, becoming kind of the object of my affection now outside of Google and the rest of the marketplace, but placing a 30-day short position on Bank of America. Thanks a lot, everybody, for joining us here at TheoTrade.